Hello, and thank you for joining us for this presentation. My name is James. I'm an analyst with EMU's investment fund.
Hi, my name is Orlando. I'm an analyst for Eagle Investment Fund.
Hello, my name is Nana Adamako, and I'm an analyst with the Eagle Investment Fund.
The fund is a student-led investment portfolio with 2 faculty advisors and a panel of external advisors. In this presentation, we will go over the analysis and actions taken during our portfolio's 4th quarter rebalancing process for the period ending on January 31st, 2020. Next slide, please. A major part of the rebalancing process for the portfolio was conducting a macroeconomic outlook. We performed extensive research and analysis on domestic and global events from the quarter to forecast their impacts on future market conditions and the economic environment. Some events we evaluated as having a positive impact included the USMCA and the Phase 1 trade deal with China. Some of our negative impact events included the US airstrike on Iran, Brexit, and of course, the coronavirus outbreak. In fact, COVID-19 has been on our radar since the early days of the pandemic. Because of this, we made adjustments to establish a more defensive portfolio position and have mitigated some loss as a result. Overall, we had initially projected continued but slowing growth for 2020.
Corporate earnings were relatively flat in Q3 2019. However, there was a slight rebound in Q4. Most of the growth was characterized by multiple expansion. Moreover, easing by central banks caused bonds and other debt securities to soar over the last year, exemplified by the S&P 500's earning yield of 4.69% compared to the US 10-year bond yield of 1.52%, thus causing investors to pursue risk assets such as equity securities. Next slide, please. The Eagle Investment Fund uses the S&P 500 as its benchmark, so we replicated all 11 sectors of the S&P 500. For the first quarter, EIF returned 9.63%. Comparatively, the S&P 500 returned 7.78%. Major contributors to this performance were the technology and financial sectors. During the period, EIF outperformed the benchmark in all categories while maintaining a lower beta. Over the investment period, EIF realized an annualized standard deviation of 7.78% compared to the S&P 500's of 9.08%. Next slide, please. Although EIF has outperformed the S&P 500 by 2.5%, its total return is negative 12.41%, while the S&P 500 has returned negative 14.91%. Moreover, EIF has a moderately better Sharpe ratio of 1.954 compared to the S&P 500 Sharpe ratio of negative 2.01. Next slide, please.
Here we have an overview of our rebalancing report. The rebalancing report took place in January 31st, 2020, affecting these sectors: a decrease by 1% in customer discretionary, customer staples, and healthcare, and an increase in sectors as energy, industrial, and materials. Main stock affected by those changes, we added NVIDIA, Taiwan Semiconductors, and Highwoods Property. And we sold SAP, Proofpoint, and NTNT.
EIF was on par with the S&P 500's technology sector returns. The S&P sector returned 14.08%, while EIF tech sector returned 13.8%. As the figure on the right indicates, profits were taken on Apple Inc. and the position returned to its original weighting. Furthermore, both SAP S8 and Proofpoint were replaced with NVIDIA and Taiwan Semiconductor Manufacturing. Next slide, please. As the sector performance figure indicates, EIF utilities outperformed the S&P 500 utility sector by 3.09%. We held our positions in the sector during this rebalancing period. My colleague James will tell you more about real estate.
Overall, our outlook for the real estate sector was initially generally good. We had expected low to moderate gains in most segments, with growth slowing from 2019 levels. Generally speaking, our portfolio kept pace with the benchmark. However, we decided to reduce our position in preferred apartment communities due to performance issues. After performing an analysis and valuation, Highwood Properties was added to the portfolio.
Hi again. I will talk about industrials and material. The industrial sector has a weight of 5.92% and performance of 2.94% up to January 31st. Key event for the sector and an outlook for 2020, the firm started developing their industrial Internet of Things, which is related with cloud and data storage. Well, until at this point, they were provided by third-party providers. Concern about China and world slowdown has been seen as potential risk for their data, which has increased adoption of industrial Internet of Things. Going to the next slide, we can see our 5 stocks which make in our industrial sector, which is Simpson Manufacturing, Lockheed Martin, Nielsen, John Deere, and Siemens. Going to the material sector has a weight of 5.84% of our portfolio and underperformed S&P by minus 0.54%. Material sector has been very sensitive from US-China deal recently, the coronavirus, where manufacturing has stopped production. Lack of raw materials has been seen in the supply and demand side, the main side. Transportation and exploration has been affected as well. A key in the 2020 outlook, where investors see very important environmental, social, and governance impact. Environmental footprint has put in edge transportation and energy sector, where we see demand in the electric vehicles, which has increased the demand for lithium, copper, and related materials. An overview of the sector, we have 4 stocks in this sector, which is Martin Marietta, Berry Gold, Innospec, and Crown. Benefits of Eagle Investment Fund. Benefits are applying analytical concepts and techniques which will help students in the investment research, security pitches, sector reports, which can be quarterly or annually. Other benefits like long-term development in skills like communication, leadership, and presentation skills, increasing academic standards comparable with the best schools around the country, benefits in networking opportunities with industry leaders and exterior board advisors. On the last slide, we can see from a survey in 125 business schools from 1,500 alumni, they said that the school's alumni network has helped them to build a career. How we can define a good business school? A good business school is a school where the return on investment is faster and higher. Is a return which comes during all our life, but those opportunities come from networking we have, especially from the alumni network. A wider alumni network translates in more opportunities out there. More than 90% of these schools up here have a student managed fund. By offering the same academic standards, we expect to improve enrollments and expand our alumni network through it. And thank you for participating, but we are open for questions.